Hello and welcome to Ask for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here are some of the trends we're going to be diving into. What a difference a day makes. Stocks retreating from Monday's highs as investors wait on word from the Federal Reserve about a rate cut. At the end of the Tuesday session, all major indices did end the day lower. It may be easier than ever to get in on IPOs literally at your fingertips, and we're speaking with an expert on how to get access as a retail trader. And can AI be good for business when you're in the business of protecting identities? We're speaking with the CEO of Okta. It's an interview you don't want to miss. Well, access to getting shares in IPOs is opening up as brokers allocate shares of these initial public offerings to retail clients. Retail investors now getting more of a chance of taking a piece of the public market action. For more on this, I want to welcome in now Neil McDonald, CEO of the online stock and options trading platform Moomoo. Neil, it is always great to see you, especially on set. So this is a fascinating theme, Neil, because so traditionally bankers would dole out shares of an IPO maybe to its wealthy customers or institutions, but now you see ordinary investors, retail investors getting in on it. Explain this trend to us, Neil. What are we seeing?
Yeah, I mean, traditionally, retail's got less than 5% of any IPO because the banks want to give the IPO to the people who pay them money, right? So retail hasn't been a force. In the last week with the more international companies that kind of speak to retail, so Bullish, Figure and Gemini, we were able to sort of bypass and go straight to the companies because we had a relationship with Bullish, for example. So I met the Bullish CEO. I said, here's what we do. Here's our platform. Here's our 27 million people community. We're stockholders. We're not flippers. And I can show some data on that people who bought previous IPOs held the IPOs.
And why, Neil, you mentioned these companies. Why do they want to do this? Is it about, hey, we're rewarding our fans? Is it because we're looking for ways to support the share price, improve trading liquidity? What are the reasons?
I think liquidity is one thing. For example, obviously Bullish had the huge move on the first day. It came off, but every day since the day after trading, Moomoo's been net buyers. Everyone's talking about Bullish in the community. I think the brand recognition is really strong for the company. We've got 24,000 holders of the stock. And the average holder is $10,000 to $15,000, $20,000. These aren't $500 accounts. These are proper investors. So they tend to be more sophisticated. They understand the company. They want to talk about the company. So there's lots of buzz around all three IPOs on our platform.
You mentioned some of the companies, which is Gemini you mentioned, Bullish you mentioned. I was interested in whether there are certain kinds of companies that you think, Neil, are going to be more likely to do this than others? Like, is it going to be mostly crypto firms, AI firms?
I think crypto and AI right now, just because I think that our client base tends to skew smarter, a little bit younger, more tech savvy. 50% of our subscribers were from outside the US. So we have people from Hong Kong, Singapore, Australia, Japan. So companies like getting their stock in hands for non-US domestic investors as well as US domestic investors. But I do think we've got BitGo to come, Discord is coming. So those will lean into our client base because it's a younger, kind of more technical client base. But we're happy to get involved in any of the IPOs if we think it's going to be good for our clients.
How do you decide, Neil, which Moomoo customers get access to the shares?
So we don't do a straight line algo. We don't do a lottery system. So we look who's held in the past, who's still a holder, who didn't flip the stock. So we kind of rate those guys better. So we bell curve it. So everybody, 100% of our clients get something. And we try and reward the clients who are longer term investors and not just the guys who we think will flip.
Do you have actual policies in place, though, Neil, to prevent the investors from flipping the shares?
There's nothing you can do to prevent you. Once the stock is open, what we can do, though, is make sure people understand that for future IPOs, then what we will do is reward people who've held and not flipped. And so our algo does the adjustment. So if you've held Bullish and you've done very well. If you've held Figure, you've done very, very well. The next IPO, you will get your full allocation.
Do you think, Neil, any risk here that retail investors could be kind of fickle about this. What I mean is that you might see a lot of excitement for this trend right now because, hey, we've all been, the IPO window's open, we've been watching these pops that some of these names have been seeing. They're incredible. What if, though, Neil, the script flipped and all of a sudden we started hearing a lot of IPOs that were kind of disappointing, they were underwhelming? How might that impact the theme, the trend we're talking about?
Yeah, I mean, that could happen. Right? We can't predict what price the price action following the IPO. What I would say, though, is what we've seen, going back to, we discussed this about the narrative around retail traders and what happened, like Liberation Day, that was our biggest single influx of new money coming into Moomoo. So retail now, they buy the dips, that they're not scared by sell-offs, they tend to be more buy and hold. So I can, the old narrative where retail was kind of, not very strong hands or would panic out or take profits too quickly, that whole narrative's turned on its head. It was the hedge funds who were selling Liberation Day. It was over-leveraged companies. And when NVIDIA got below 100, our boards lit up with thousands of people saying, this is where we're going to buy. So it's kind of turned on its head. Retail has been the force that have really stabilized the stock movements.
What's interesting too, Neil, is just kind of this broader trend you see of giving smaller investors, retail investors, ordinary investors, more access to private companies in a range of ways, like tokenizing private companies, for example, is known. What do you just make of the general theme?
I think it's great. I mean, why should the institutions get everything at the issue price? Right? Companies are global. The social media with things like the Moomoo community platform. You want excitement around your stock. You want people talking about your stock. You just don't want to put it in 5 or 6 large holdings, because if they decide they don't want to hold the stock anymore, that's 5 or 6 large holders can tank the stock.
One final question I have, I'm just interested to get your take, because we've been talking a lot on the show. Trump on social media posts about how, maybe in the future public companies, they report every 6 months versus every quarter. What do you make of that? Yeah,
I was just watching your previous segment. I mean, in Europe, it's every 6 months. There's an accusation that some companies are, like, if Boeing had to do quarterly when it built the 747, it would never have built the 747 because it lost money for 7 years. So there's an argument, like in Switzerland, Roche, every 6 months because it's an R&D company. So there is an argument that too frequent reporting, you tend to just mark the quarter and do what it becomes very short-termist. So there's that argument, and then the argument that more information is always better.
Neil, always great to see you, especially on Sunday.
Thank you, Josh.
Thank you, sir.
Pleasure. Thank you.
A week after business leaders gathered at Goldman Sachs Tech Conference, our very own executive editor Brian Sozzi is keeping the tech conversation going, speaking with Okta CEO on where the company stands in the AI race.
If you zoom out and look at the past 15 years of our business, at first it was about building this infrastructure layer, this identity layer, connecting all the people and the resources that helped the transition to cloud. The second was security, where everyone really woke up and realized that identity management was imperative for security. You couldn't have strong security without multi-factor biometric authentication and access control everywhere. And now what's happening as everyone rushes to deploy AI agents, everyone's realizing that you can't deploy AI agents unless you get your identity foundation correct. You can't have these agents running around your company connecting to everything unless you know what they're connecting to, what they have permissions to, what kind of data they can access, making sure none of the credentials get leaked or none of the passwords get exposed. And that's what we're all about, and we're excited to power this layer of the AI agentic boom.
Todd, these agents are already infiltrating major companies. This sounds like a potential disaster scenario for very large companies.
Well, I think there's the upside scenario too, which is automating work and augmenting people inside these companies to do their jobs more effectively. But like every technological wave, it also comes with risks. And I think some of the risks in this case are the most basic. You see companies aggressively pushing out these pilot AI applications. Maybe it's a chatbot that helps applicants on the website learn about jobs, or maybe it's a customer support app. These pilots get pushed into productions and basic security controls aren't followed. They don't have basic security controls about what the agent actually exposes to the end user. Do they expose credentials? Do they expose secret information? And we can help secure that and help these companies take these pilots into production in a way that helps their business and keeps them secure at the same time.
Because of the proliferation of these agents, at least here in the early going, Ty, is the next generation of cyber attacks, are they going to be on grander scale?
Well, I think that as we move forward in technology, it's always the case that we automate more, we connect more information. And I wouldn't say the attacks get more grand, but they get more novel. There are things we don't anticipate. That's why it's so important to get the foundation right. The first thing you have to do is have a foundational control of what the agents can access and the data they're exposed to. Then you really have a solid foundation to secure everything that goes on above that.
Something happened last week when Oracle, or a week and a half ago, came out with that guidance. Of course, Todd, I know you don't work at Oracle, but you've been in the tech industry for a while. Like, how does a company like that's been around for decades, come out with this amazing backlog? What is happening really at the ground floor of this industry?
Well, I think the technology industry, as you know, Brian, we get all excited about quarter to quarter, but it's really these innovations and these steps forward that take many, many years to build. Oracle has been working on their cloud infrastructure really for 10 or 15 years if you go all the way back to the Sun acquisition. So it's about putting these steps in place to benefit for the future. And that's what I feel like we're trying to do with AI. We've been working on this identity foundation for 10 or 15 years. And now we're in a perfect position to help the world move toward this agentic future by providing this key security layer.
You came out with generally well-received guidance just in late August. But in light of what we heard from Oracle and some other players in the industry, is your guidance, is it too conservative?
Well, we're very happy with our guidance, and we're very happy with where the business is. In the quarter, we reported strong momentum in big deals, strong growth, strong profitability, and also a record pipeline going into the second half of the year. So we're focused on executing the second half of the year, and we're seeing the trends that are driving demand are companies see a real opportunity to automate their businesses, make their people more effective, decrease costs, increase revenue, and they realize that what we do, which is building this identity security platform, is foundational to what they do, and we're excited to serve that up to them.
For the first time in a while, I heard you talk a lot about the business you're winning with government. How are you winning that business, and what does some of these government deals entail?
Well, in the quarter, many of the top deals in the quarter 7 of the top 10 deals were in the public sector, which is a very impressive number for us in a quarter that had a lot of big deals. And I think in the government, you're seeing a lot of what people don't understand. A lot of times the government, first of all, they invest a lot in technology. And second of all, they have a lot of legacy technology. Some people think big companies have legacy technology. Governments have a ton of legacy technology, and they're trying to modernize it. They're trying to move to the cloud. They're trying to be more secure. They're trying to deploy AI as well. And identity management fits right into that. It connects with every system they have, whether it's an old system or a new system, lets them support new initiatives, new applications, new kinds of citizen portals and citizen mobile apps. So we're really purpose-built for this transition they're going through, and that's, I think, what's driving that's what's driving some of these good results.
I was talking to Salesforce co-founder Mark Benioff, Todd, at the Goldman conference. He was saying he needs fewer employees because of the agents he's deploying in his own company. How is AI impacting the insides of Okta?
I think what we're doing is we're taking AI and using it across the entire company. And what it's allowing us to do is really focus on growth opportunities, because we're all about growth and accelerating growth. And if we can take dollars and invest them in R&D, and those engineers are more productive because of AI tools, if we can make the customer experience better, get them faster time to resolution, we're already seeing that our customer satisfaction surveys are over 90% positive. And that's a huge acceleration because of some AI technology and the hours and the time we've saved in the customer support desk. So it's really a boom across the board. And for us, it's about taking those resources and focusing them on growth and making sure we can grow this business to meet the demand we're seeing from this market right now.
Time now for to watch Wednesday, September 17th. Starting off on the Federal Reserve, all eyes will be on the Fed's September interest rate decision. The two-day FOMC meeting concluding on Wednesday. Wall Street expecting the Fed to cut rates at Wednesday's meeting. We'll also be getting a new summary of economic projections with the decision, also known as the Fed's dot plot. Fed Chair Jerome Powell will be giving a press conference after the interest rate decision. Yahoo Finance will begin coverage on Wednesday at 2 p.m. Eastern. Taking a look at earnings, we're going to be getting a new batch of reports from notable names, including General Mills, Bullish, and Cracker Barrel. Bullish announced results for the second quarter and hosting its inaugural earnings call after the markets closed on Wednesday. Analysts seeing a path for bullish to take U.S. institutional market share from Coinbase. Investors are going to be listening close to the company's first earnings call for any clues about its path forward. Moving over to housing. Fresh housing data is coming out on Wednesday with housing starts and building permits. Economists forecasting housing starts to fall to an annualized rate of 1.37 million, while building permits tick up slightly to 1.37 million. Stick around, much more Ask for a Trend still to come. U.S. stocks pull back from records as the Fed kicks off its September policy meeting. Yahoo Finance's Jared Blikre joining us now with the trading day takeaways. Jared.
Thank you, Josh. We had a couple of streaks and they are no more. So that's my first bullet point here. NASDAQ Composite had 6 record closes in a row. This is a 1-month chart. Each little candlestick is 1 day. And here was the streak. Boom. But that is over now. It just closed slightly in the red there. And the NASDAQ 100 had a streak of 9 days. They weren't all records, but that is gone too. And I wanted to show you something else. Utilities had been up for 5 days. And then we got this today. And I didn't really see a huge catalyst there, but might be something we're going to talk about next.
Yeah, let's talk dollars.
Yes, it was a pretty bad day for the dollar. So that's my point number 2. The dollar nose dove. I think that's the proper past tense, nose dove. But let's check out some of the charts here because the dollar has been hovering around 3-4 year lows here. And so we'll tackle that first, but there's a lot of stuff going on. We know that it's been under pressure for quite some time. Here's the year to date, down 11.63%. That is a large amount for any currency to be down, not to mention the reserve currency of the world. But let's check out a 5-year chart, and you can see we are just touching the lowest level since about, since about 2022. And you can see there's not much keeping it from going lower there. So if we take the inverse of that, and this is going to be the euro versus a dollar, if you're planning on going to Europe, guess what? Vacations are getting more expensive, 11-12% more expensive already, and they could easily head, this exchange rate could go from 1.1868 up to 1.2, 1.25 pretty easily. So there are a lot of ramifications here. What's going on? Real yields are coming down. There's the Fed, which is in easing mode, and so you also have questions of Fed independence. I would note that Stephen Myron was just confirmed today, and so all of this is feeding into that dollar weakness. And foreigners, they still like U.S. assets. They still like our stocks, but they are hedging, and so they're trying to prevent themselves from losing out on our gains by hedging that dollar risk, and that eats into the returns.
So if we're talking dollars, should we check out gold?
Yes, sir. And that brings me to my third point here, because gold hit another record and it finally crossed 3,700. So just inching closer day by day to that 4,000 mark. And let's plot what's going on there with the yellow metal. And it's not just gold, it's also some other things. We saw with big dollar weakness, you typically see commodities do fairly well. This is a 5-year chart. I wasn't even planning on showing this, but that shows the 90% run up that it's had in that time. Over the last year, up 44%. And here is where that big breakout happened just under a month ago when it screamed higher after that nice consolidation. So we got gold heading higher. Silver futures were down today, but they've also been net up over the last year. You can see they kind of took off with gold up 40%, and you can throw some other commodities in there as well.
So if we're talking gold,
yes.
What about digital gold?
All right. I'm glad you said Bitcoin. I'm glad you almost said Bitcoin. All right, so Bitcoin has actually doubled over the last year, and 100% is nothing to sneeze at, but we haven't had a record high in probably a few weeks, maybe a month or so, just kind of consolidating right here. I haven't talked a lot about Bitcoin recently because I haven't seen a lot of action in either Bitcoin or some of the altcoins, but who knows? With dollar weakness, that just kind of supports the bull case for a lot of these different things, which would include crypto, which would include gold.
What are your expectations tomorrow? Give me the Jared Blikre read.
Oh, I think it's going to be I think if there's a lot of dissent, this could actually throw markets for a loop. So we could get dissents not only because things are too hawkish seeming, because the result is too hawkish, but also because it's too dovish. And a dissent like that we haven't seen since 1988. That was the beginning of the Greenspan era, I think. I wasn't following financials back then, but this is really an historic one. And the composition of the Fed itself, with Lisa Cook and everything, that could really change the dynamic going into next year. So tomorrow's a big one, and we're going to keep it right here.
All right, thank you, Jared.
Appreciate
it, sir. That's a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet. Have a great night.